Welcome to Money Talks. I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, Philippine inflation for March is at 1.8%, slower than that of Business World's poll and near the bottom end of the Bangko Central's target range. In the U.S., stocks plunged to its lowest level since 2020, following U.S. President Donald Trump's tariff announcement. Can foreign investors save the day for the Philippines? We speak to Special Assistant to the President for Investment and Economic Affairs, Secretary Frederick Go. And food. The 17th Philippine Food Expo opens today. Anton Sayo of PhilFoodX joins us in the program. At the top of the hour, the government released data showing Philippine headline inflation easing further to 1.8%. National statistician Dennis Mapa announces the Consumer Price Index, or CPI, falling to 1.8% in March, coming all the way from 2.1% in February, led by the decline in prices in meat, followed by fish and vegetables. Now, the result is settled within the Bangko Central's month-ahead inflation forecast of 1.7% and 2.5%. So the March print is also lower than the 2% medium estimate of the Business World poll that we conducted. So this would also be the lowest monthly imprint after a month. With us now for more is Special Assistant to the President for Investment and Economic Affairs, Secretary Frederick Go. So good to see you again, Secretary Go. Thank you so much for joining us.
Good morning, Cathy.
All right, so what do you make of the inflation print? 1.8%, near the bottom end of the Bangko Central's range, and definitely much slower than the Business World poll.
Well, we're very happy with it. The government is very focused on controlling inflation because this improves accessibility and affordability of basic goods and commodities for our countrymen. And controlling inflation puts more purchasing power in the hands of the consumers, which is very good for business and the economy.
And foreign investments, I would presume, because inflation or the lack thereof is one of the reasons you're citing to potential foreign investors to come to the Philippines and do business.
Oh, absolutely. Absolutely, Cathy. We always talk about our good GDP growth numbers, 5.6% last year. And we also talk about the government's efforts, successful efforts in controlling inflation. Among others, of course, we also talk about the strengths of the Philippines, such as the 120 million Filipinos. The demographic dividend of the Philippines is paying off very well right now. And the Philippines also just recently got off the gray list of the Financial Action Task Force. So a lot of good news coming out of the Philippines.
And especially so after the April 2 tariff announcement from the U.S. Have there been a pickup in inquiries from potential foreign investors since yesterday?
Yes, I've heard anecdotally from the various investment promotion agencies that they've been getting a lot of calls. We took a basket of 12 countries, and among those 12 countries, and we ranked it from highest to lowest in terms of these new tariffs, and the Philippines comes out number 11 out of 12. So like we're at the bottom, right? So I think it's really an opportunity for the Philippines to attract investments from all these countries that have been imposed with higher tariffs. We took a look at all our Southeast Asian neighbors, except for Singapore. We have an opportunity to capitalize on this.
All right, so how are we capitalizing on this? Given that more foreign investors, could they make up for the losses that our exports sustain because of the 17% tariffs?
For one, we're in early days. We're going to be meeting with the Board of Investments as well as the Exporters Confederations and discuss with them what steps we can take to address these possible negative effects of these new tariffs. But the Philippines has been, the Marcos Jr. administration has been very focused on attracting investments. So we have put in place a lot of the laws, executive orders, to ease doing business in the Philippines and to reduce cost of doing business in the Philippines. We have, for example, the Create More Law that we recently passed that is putting back the predictability of doing business in the Philippines. It gives investors anywhere from 14 years to 40 years of either income tax holidays or reduced income taxes. And we've also clarified a lot of the fiscal incentives that they're entitled to if they invest in the Philippines. So we're very confident that we've put in the foundations to attract these investments.
But what do you tell participants, Secretary Go, when they come to you and say that there is a travel advisory in your country or that the infrastructure isn't as seamless, supply gaps a challenge, and there's changing rules in the middle of the game?
Well, the administration of President Ferdinand R. Marcos Jr. Has recognized all these gaps and has been working on them piece by piece. I mentioned the Create More law. We also have the Green Lanes for strategic investments. We also have the Public-Private Partnership law, all of which were passed during the administration of President Ferdinand R. Marcos Jr. And I'd also like to mention, since you singled out infrastructure, we're now working on a right-of-way law with Congress, which hopes to address these kinds of issues.
And I understand that you've got an upcoming international roadshow from next week, and they include Korea, Japan, Taiwan, the EU, Middle East, and China. And the US is also among the destinations. So what's planned there?
Yes, we kicked off the Create More Roadshow with a domestic event. We started with the Philippines because historically the domestic businesses comprise the largest part of investments in the Philippines. Last year, we had a total registered investment amount of 1.9 trillion pesos. About 70% of this came from domestic businesses. But of course, what we're trying to do here is to attract foreign direct investments. So we're doing a roadshow in all those countries that you mentioned earlier to, to really announce to them that the Philippines is open for business and that it's never been better than this.
So which sectors are you hoping to sell when you visit the US and all the other countries in that international roadshow?
Oh, I'm picking off 8 sectors, starting with the semiconductors and electronics sector, the renewable energy sector, the food sector, pharmaceuticals, steel, tourism, minerals, mineral extraction, and mineral processing.
Well, that's a whole lot of a laundry list there. All the best in your roadshow. Secretary Go, we'll keep track of the progress. Appreciate you making the time. Secretary
Thank you.
Frederick Go, the Special Assistant to the President on Investment and Economic Affairs. Well, let's check in on the Philippine captains of industry next and see what they think of the remainder of this year, given the sustained global policy uncertainties companies face. The EY CEO Outlook Pulse survey aims to provide critical insights into local and global market development, as well as business expectations for future growth and long-term value creation. The issue delves deeper in understanding Philippine CEOs' confidence in areas such as investments, strategic business pursuits like M&A and joint ventures, and transformation initiatives in the next 12 months. With us now for more is Noel Rabaha, SGV Strategy and Transactions Leader. Good to see you again, Noel. Thank you so much for joining us.
Good morning, Cathy.
Yeah, so
thank you for having me.
Your thoughts on what Secretary Go just said there? The Philippines is open for business, and we mean business, post-April 2 Trump tariffs.
I'm sorry, Cathy, I cannot hear you very well.
Okay, what do you make of what Secretary Go just said about being the investment destination?
Yeah, so as mentioned by Secretary Go, there are a lot of positive things about the Philippine economy. One is that the outlook on the Philippine economy remains to be very promising. It remains to be expected to be one of the fastest growing in the region, right? And then we have very good news on inflation. I heard you report earlier on a very positive news with inflation down to 1.8%. So we're probably expecting more BSP rate cuts, and with the lower inflation, lower interest rates, and higher household income, that all point to those all point to stronger domestic consumption, right? And that bodes well for both businesses and investments. No? So a lot of positive things for the Philippines that I believe will, I agree with Secretary Go, that will attract a lot of investments.
Well, let me pick up on that survey that EY did. 62% of Philippine CEOs feel somewhat optimistic towards the local content. But in your meeting with CEOs that the survey revealed yesterday, what sense do you get now on their cautious optimism that you captured from 4 months ago because of the survey?
Okay, so well, I guess the cautious optimism is also actually arising from the inflationary pressures that continue to be there in the market. No? So locally, we continue to be vulnerable to weather disturbances that affect the food supply, and then globally, there's that geopolitical disruptions all around. And just yesterday, no, the news came out on the higher tariffs being imposed by by the U.S. government. No? So I believe that has not been factored in yet in the survey. So that will likely affect the CEO confidence for 2025. No? But as mentioned also by SecGo earlier, no, there may actually be an opportunity for us here, given that the tariff that's imposed on the products exported by the Philippines to the U.S. Is expected to be lower than the tariff that's imposed on other key exporters to the U.S. Market. So if we play our cards right, then probably that will even result in growth in exports for the Philippines, and that might even lure manufacturers exporting to the US to relocate to the Philippines if we play our cards right.
If we play our cards right, how do you think that should change?
Well, that means, well, in terms of attracting investments, no, that means that we'll have to put in place the right infrastructure and the right incentives that are expected to come from the recent economic reforms that have been adopted by the government, like, for example, the Create More and the Public Services Act, and also the Ease of Doing Business Act, among others. No, so if all of those are in place, and with all the positive news around the Philippine economy, then we should be able to attract investments, and we may be able to even increase our exports. No?
Okay, just as a final point, what do our business folks want? Is it a 25 basis point cut or a half a point cut on April 10th from the Bangko Sentral?
Um, I um, I would think it's more of 25 basis points. I think that's more of the expectation. That's because inflationary pressures remain to be there, and given the uncertainty brought about by these inflationary pressures, then there's an expectation that the BSP will be a little more cautious in terms of cutting the interest rates. Though. But hopefully it will actually come down already.
All right. Well, thank you so much for giving us all the context from the point of view of our Philippine CEOs. Noel Rabaja, SGV Strategy and Transactions Leader, joining us.
Thank you, Cathy.
And you're watching Money Talks. Coming right up, U.S. stocks plunged to the lowest level since 2020 following Trump's so-called Liberation Day. And the 17th Philippine Food Expo kicks off today. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. U.S. President Donald Trump's sweeping tariff plan sent Wall Street to its biggest wipeout since the onset of the COVID-19 pandemic in 2020. Stocks lost over $3 trillion in market value yesterday, Thursday, its biggest one-day decline since March 2020. The Dow fell by over 1,600 points, or nearly 4%. The S&P tumbled by almost 5%, its seventh worst showing in the last 10 years. The Nasdaq shed by nearly 6%, marking its steepest decline since March 16, 2020. The Russell 2000, which tracks small businesses, declined by over 6.5%, becoming the first U.S. index to enter bear market territory after losing by over 20% since its November 2024 peak. Looking at Europe, the regional stock 600 was down in yesterday's trading by over 2.5%. London's FTSE 100 shed by over 1.5%, and both Germany's DAX and France's CAC index fell by 3%. The European Union got 20% reciprocal tariffs, but the UK walked away with just the baseline levy of 10%. Trump's tariffs also triggered a sell-off in Asian markets this Thursday. Japan's Nikkei 225 led losses, falling by 2.7%. Hong Kong's Hang Seng lost about 1.5%, and Australia's ASX 200 and South Korea's Kospi down by less than 1%. Asian countries were hit the hardest by Trump's reciprocal tariffs. China is facing a 34% levy, Japan 24%, Australia only got 10% baseline duty. As for U.S. futures, they're pointing to a slight decline when the markets open later tonight, Manila times. You can see the down arrows except for the Nasdaq, the Dow falling by nearly 0.2%, S&P 500 down by about 0.1%, and the Nasdaq up by about 0.1%. Asian markets extending their decline at the get-go here. Opening Friday's session, we are seeing some red arrows all around. ASX and Kospi down by 1%, and the Nikkei 225 tumbling by 2%. Philippine markets were not spared by the global sell-off as Manila faces a 17% reciprocal tariff. PSEI fell by over 1% on Thursday. This Friday, the market is opening down at the get-go by about 0.5% at 6,111. Let's take a look at the Philippine peso. It opened this Friday stronger at 56.95 to a dollar. We've already breached the 56 level mark. Peso closed Thursday's session stronger at 57.95 against the greenback. Well, with us now for more is Dr. John Paulo Rivera, the Senior Research Fellow at the Philippine Institute for Development Studies. So good to see you, JP. Thank you for joining us.
Good morning, everyone, and thank you, Cathy, for having me here.
And a round of good news, 1.8% for inflation.
Yeah, that's very good news because it means that the government is very successful in managing our inflation. However, we can see that the 1.8% inflation is, while it's way below the healthy band that the BSP is forecasting of 2 to 4%, it is not excessively low to the point that enterprises would be hesitant because of the low prices that would affect their profits.
So what would that mean then for CapEx? Do you think they're going to go ahead with it, given that there is low inflation?
Well, that would depend on the trend of inflation, because the 1.8% as of March is good, but if it will continue to be so low over the next few months, then it might trigger that, it might send a signal that demand is quite slow.
But can it be slower now that we've got 17% reciprocal tariffs? I mean, at a certain point, there is that a relative comparison with the other ASEAN. What's the interplay then of
well, it might be the
tariffs
case
and
that
inflation?
It might be the case that other countries or foreign investors would see the Philippines as a better investment destination because of the relatively lower tariff imposition compared to our neighboring economies. It can trigger greater production and greater consumption, of course, given lower inflation. So far, no, in the short term, it would be a good development for our Philippine economy.
But that's just tariffs. But what about the policies that Secretary Go had made a mention of, that a lot of policies are already in place to make this an investment destination versus other ASEAN countries? Do we have that competitive edge, you think?
Well, as of the moment, the effects of the policies are taking effect. Like, for example, recently, our amendments in the constitutional requirements, they are facilitating the inflow of foreign investments because of better ownership, better capitalization, to the point that we are getting better, we are at par with other Asian economies in terms of conduciveness to doing business in the region.
Right, but I did make a mention of the challenges there, and one of them is changing rules in the middle of the game, maybe infrastructure not yet as seamless, and there are supply gaps when you talk about the supply chain.
But the effects of the policies would take time, the infrastructure would also take time. But what's important for now is that the Philippines, the government, even private sector, we're getting started. And that's the important thing for us now.
And that the Bangko Central has started cutting rates. What's the expectation now? Do you think it's going to be 25 or 50, given that we do have a lot more leeway? 1.8% is at the lower end of the band of the Bangko Central's range.
Well, we're seeing a rate cut. We're expecting a rate cut, but I personally see it at 25 basis points.
Why not 50?
Why not 50? Because as of the moment, the BSP is trying this balancing act of trying to manage inflation and at the same time manage exchange rate. An excessive reduction in interest rate might trigger a depreciating pressure on the Philippine peso, which may not be good as we're trying to continuously manage inflation headwinds.
But do we still have to manage exchange rate? I just read 56.95. We hadn't reached that level for many, many months. So that wouldn't be an issue, would it?
Well, that would depend on how the economy would behave, would react to the tariffs, for example, and to other geopolitical issues happening around. So until we see a stable direction for exchange rate, then it might be the case that BSP might continue the easing throughout the year.
So GDP, are we looking at north of 6%, or is that a far-fetched idea?
Well, GDP of 6% would always be possible, but I believe that there was a recent report that the GDP growth was raised to 5.7% from 5.6, which is a good indication that the Philippine economy is demonstrating resilience, demonstrating added activities, greater activities, and it is not impossible for us to reach the 6%, especially that the Secretary earlier mentioned, these policies that are taking in effect right now so that we can really reach that 6% towards upper middle income status as well.
Right. Always happy to hear some green shoots and maybe silver linings. Thank you,
Yeah,
JP.
thank you so much.
Appreciate your
Thank
time.
you.
And that was John Paul Rivera of Philippine Institute for Development Studies. Fuel prices are expected to increase next week. Gas and diesel prices expected to increase by up to 70 and 60 centavos per liter, respectively. Meanwhile, kerosene prices may stay the same or change slightly by 20 centavos. The adjustments follow concerns over a global trade war after Trump imposed tariffs on its trading partners. Oil prices slightly dropped as fears of slowing economic growth outweighed concerns over possible U.S. sanctions on Russian crude. Meanwhile, China's refinery output is also expected to decline due to maintenance. Final price adjustments will be set after today's last trading day. Food. It is time to descend upon the World Trade Center, where the 3-day 17th Philippine Food Expo opens its doors today. With us now for more is Anton Sayo, the Director VP for External Affairs at FoodX. So good to see you, Anton. Thank you so much for joining us.
Yeah. Hi, Cathy. Nice to see you.
All right.
In a different setting. Food
I
this
know
time.
it is food, but I was expecting some food in the backdrop, but I know that it's opening in a few hours. For once, we're not going to be eating tariffs in this discussion. What's different about this year's Food Expo? You're on your 17th year.
Yes, well, this year we have more exhibitors. We have about 300, and we have 75 equipment and developers that are introducing new and innovative equipment for the food sector. So that is one of the highlights. Plus the fact that we have more innovative products that has to do with health and wellness. So it's a lot of people find it really exciting, and they come in droves, as a matter of fact.
Yeah, I'm sure there's like a lot
Sports
of
teams are coming and that.
taste tests and all
Yes.
that. You know, when I think of food, I also think about inflation and the money that I have to give up in order to buy mine. How has inflation played a part in most, if not all, your participants' businesses this year? Had it been difficult or less so? Because inflation's falling.
Well, the fact that the peso dollar rate is easing up is helping those that import some of their components. However, the other side of the coin, whenever you have this appreciation of the peso vis-a-vis the dollar, is the export revenues also go down. So, however, in terms of inflationary pressures, some products do get affected, no? Especially those who make calamansi, even coconut products. In a general sense, there is an increase in the way of not only in the way of doing things like logistics, but also in the supply
Well,
of some of the raw material inputs.
let me
Like
pick up on
coconut,
the
coconut is
food exporters. Yes, we do export coconut products, but as they
We do.
export to the U.S. and the other markets that have been slapped with reciprocal tariffs, what now? What next for the food exporters?
well, the thankfully we have DA, for example, that has put a lot of emphasis in bilateral negotiations. So they were recently in Japan and negotiated for lower tariff rates for certain food products or fruits. The tariff, in terms of its impact on exports, uh, people still don't really understand the full impact of this because their product market scope really depends to a large extent in their production function. So some of people who really import a lot also worry about the way their own exports to the U.S. will happen. But basically, the bottom line is they are uh, they have a diversified uh, market scope. No, so a lot of them export to the Europe as well. A lot of them export to the U.S.
That's good to
But
know that, yeah,
the
that they,
dependence on one specific country is not there. No? So
that's good to know.
they're
So
more
there
agile
is
in that respect.
at least different revenue streams to work on. Just as a final point, what's your favorite new discovery there at the Food Expo?
Say again.
Your
Sorry.
favorite discovery? Maybe food item. If we visit the Food Expo, what do we look out
Oh
for?
yeah, there's a lot of food challenges. Even culinary challenges are going to happen. There are a lot of food exhibits in terms of new products and cook uh, test kitchen exhibits is going to happen as well. The foremost thing that is generating a lot of interest are the culinary challenges now. And of course, we also have wines, local wines that are going to be introduced, and all those new stuff that's generating a lot of interest, especially among the youth. So
Sounds good.
it's nice.
Yeah, just looking at the pictures, food coma. Thank you so much, Anton Sayo, Phil Foodex.
Yeah.
All the best at your expo
Thank you,
opening
Cathy.
till April
Yeah.
6th. So that's
Yeah.
a full
Thank
weekend
you.
at the World Trade Center. And that is it for Money Talks. I'm Cathy Yang. What a week it's been just tracking those tariffs. We've survived it, so that's okay. So we'll see you Monday at 9:30 a.m. here on One News. We're also streamed live on YouTube and on our Facebook channels. Have a great weekend ahead.